In this video, we take a look at the latest XRP news. Will XRP be able to fly to the moon? Right answer. Despite the pessimistic market outlook, positive price expectations for XRP continue to emerge, with most price forecasts forecasting XRP to exceed its all-time high reached in January 2018. While XRP price forecasts seem to be flooding the crypto market, the unresolved issue is when these price expectations will come to fruition. In view of the above, we thought it appropriate to ask Google Bard about the potential timescale for XRP to return to its all-time high price. For background, Bard is a Google artificial intelligence (AI) chatbot model. It, like Chat, might be utilized to acquire insight into a variety of urgent situations. It has always been applicable in the cryptosphere. The AU model fails to provide a particular timetable for a prospective increase in the value of XRP. The chatbot did, however, recognize that some crypto experts and elite chartists seem to believe that the XRP re-rise will take place between 2024 and 2025, while others predicted that it would take many years before the bull run began. Bard, on its part, identified certain critical events or occurrences that might have a significant impact on XRP price swing. The outcome of the U.S. Securities and Exchange Commission (SEC) v. SU Ripple legal dispute, the overall state of the global economy, technological advancements in the cryptosphere, shared market sentiments, and price changes that could be elicited due to changes in demand and supply. According to Google's A model, Ripple recently achieved a significant legal victory when the U.S. regulatory body's demand for an interlocutory appeal was denied. Ripple now has a stronger chance of winning the legal battle, which might raise the price of XRP in the long term. The global economy affects more than just physical and monetary assets. It also has an effect on digital asset values such as XRP. The global economic outlook remains a critical predictor of XRP's future price movement. Improved technical advancements in the crypto world, particularly those impacting Ripple and XRP, may result in an increase in the price of XRP. In depth, Google Bard examined the possible effects of market sentiment on XRP price rise. Positive market emotions, it is widely assumed in the crypto world, would support digital asset values, while negative ones will result in falls. Demand and supply were both mentioned as being important. When supply exceeds demand, it indicates a lack of interest, resulting in price reductions. When demand exceeds supply, it implies that the tokens are in great demand, and their values rise. This comparison was ascribed to XRP by the chatbot. Bard closed by underlining the impacts of volatility and fluctuation in the cryptocurrency market, asking investors to do their homework before investing in any cryptocurrency. As speculation about Ripple's prospective initial public offering, IPO, grows, the cryptosphere has been filled with it, notably from key players in the XRP community. One such hypothesis, offered by notable XRP influencer Reth Afkaneman, Wook, delves into how Ripple could restructure its activities post-IPO, particularly with regard to its famous cryptocurrency, XRP. According to Wook, if Ripple goes forward with its IPO, the company may route its cross-border payment activities via one or more different subsidiary businesses. According to Wook, such a strategic change might greatly reduce the complexities of payment licensing. The overall justification for this move is Ripple's planned capacity to smoothly enter new markets, facilitate partnerships with partner businesses, and thereby streamline regulatory approvals. The predicted ripple effect, pun intended, on XRP is a fascinating aspect of Wook's hypothesis. Ripple may carve out a more unique identity for XRP by transferring cross-border payments into autonomous companies after the IPO, slightly distancing it from the flagship Ripple brand. This anticipated structural reorientation would be more than just a cosmetic brand change. It might mark XRP's transformation into a completely independent entity, focusing intensely on perfecting its payment capabilities. Furthermore, Wook has investigated the prospect of Ripple locating its business outside of the United States. A relocation of this size might be enticed by the attractive tax benefits associated with worldwide registration. Concurrently, newly established Ripple offshoots may have the authority to take over smaller remittance companies without the explicit consent of Ripple's principal shareholder base. Predictably, woke's hypotheses have struck a chord with XYRP enthusiasts, sparking lively debate about the potential implications for both Ripple and XRP. Desert Capital's creator, Yasin Mobarak, agreed with woke's viewpoint. Another enthusiast, on the other hand, proposed completely renaming XRP to get it out of Ripple's shadow, a proposal received with woke's cautious skepticism, labeling it possibly structurally complex. Furthermore, there's persistent discussion as to whether Riplex will stay at the company's primary operating helm or be absorbed into the planned payment subsidiary arrangement. To be honest, these discussions, however insightful they may be, are based on conjecture and may not fully capture the final course Ripple and XRP may take. To put things in perspective, Ripple was mired in a legal nightmare in 2020 when the Securities and Exchange Commission, SEC, hit it with a $3 billion lawsuit. The regulatory agency said that Ripple deceived its investors and illegally sold unregistered securities, namely XRP. In July, a federal district court said in a complex finding that automated sales of XRP to ordinary investors did not fall into the securities category. Nonetheless, the court recognized that contracts totaling $728 million meant for institutional sales were, in fact, unregistered securities transactions. Surprisingly, both the investing community and Ripple Labs viewed this decision positively. Since X was Twitter, Ripple's struggle with the SEC has attracted headlines and sparked discussion. The original ruling of Judge Torres was eagerly anticipated, and possibly the most significant element of her opinion held that the sale of the XRP digital token on public exchanges did not violate federal securities laws since purchasers had no reasonable expectation of profit based on Ripple's efforts. The SEC, on the other hand, is nothing if not relentless. An interlocutory appeal is one that occurs while other aspects of a case are still being heard. Those who recall Judge Torres' previous judgment may recall that this case is slated to go to trial on April 23, 2024. In this case, however, the SEC filed a petition asking permission to appeal Torres' conclusions about programmatic XRP sales and other distributions of XRP as payment for services. According to the SEC, this prospective appeal would be significant in a large number of litigation. However, Judge Torres rejected the agency once again, stating that the SEC had failed to fulfill its burden of demonstrating that there were significant issues of law or that substantial grounds for disagreement existed. Although crypto proponents celebrated Judge Torres' first judgment, as well as her denial of an interlocutory appeal, this dispute is far from ended. After the April 23 trial, the SEC may appeal the whole verdict, something Ripple and XRP investors would certainly like to avoid even if a favorable judgment from a federal court of appeals is in Ripple's future. If the SEC requested and was given permission to appeal the whole case, it might be many years before Ripple and the industry as a whole obtain the clarification they need, and that is assuming Ripple wins again. That is a significant if, given that Judge Torres' earlier judgment was not a full success for Ripple. As we mentioned in our earlier piece on this matter, Judge Torres determined that Ripple violated federal securities laws by selling XRP to institutional investors. Furthermore, other courts may refuse to adopt Judge Torres' decision, whether because they disagree with her interpretation of federal securities law or because it is inapplicable to a different factual context. Consider the ruling of Judge Jed Rakoff in the SEC's action against Terraform Labs. Judge Rakoff ruled there that the SEC had a plausible claim that Terraform Labs' TerraUse token constituted a security when offered on public exchanges. However, keep in mind that Judge Rakoff made his ruling while considering Terraform's move to dismiss the SEC's action. This implies that when deciding the case on the merits, Judge Rakoff was obligated to accept all reasonable conclusions in favor of the SEC. For the time being, Ripple and the SEC will continue to prepare for their April trial, while cryptocurrency remains in regulatory limbo. Other courts may soon accept portions of Judge Torres' July 13 judgment as governing precedent, but since Congress has yet to create a complete crypto statute, it is more necessary than ever to consult with legal specialists knowledgeable with digital assets. Early consultation with Kelman Pilsey's attorneys is the most effective approach to assure compliance with possibly relevant laws and regulations, as well as prevent legal hazards and fees that may otherwise harm your organization.